Global oil prices are surging on Monday amid escalating conflict in Libya and ongoing protests in Iraq. Rising tensions in the Middle East can possibly lead to a sharp decline in global oil output. Recently, the Libyan National Army blocked oil exports from key Libya ports. Libya's national oil company declared a state of emergency and said that this partial shutdown would cut oil production by 800,000 barrels per day. This news pushed oil prices higher. Early in the session, Brent crude advanced to $65.60 per barrel but later retreated. WTI is also trading with gains at $59.10 a barrel. However, this factor may have a short-term effect since Libya's oil exports are not so significant for the global market. The situation in Libya is not the only risk factor. Escalating tensions in the Middle East may lead to disruption in oil supply from other countries. This scenario will have a more significant impact on the oil markets. On Sunday, Iraq temporarily halted output at Al-Aghdab oil field due to the outbreak of protests. As the tension does not ease, another main oil field, Badra, is at risk of closure from Monday. The ruble opened the session moving steadily higher. The Russian currency continues benefiting from rising oil prices. The dollar-ruble pair has lost ground to settle at the level of 61.55. The pair's further dynamics may be not so distinctive ahead of the new appointments to the Federal Cabinet of Russia. In the nearest future, the Russian currency will be mainly supported by the upcoming tax period in Russia, with its peak on January 27-28. Besides, the increased paying activity of exporting companies may offset the negative effects of currency interventions introduced by the Bank of Russia. Given the surge in oil prices and the sale of export earnings, the Russian currency is very likely to settle at 60 rubles 90 kopecks against the US dollar. That's all for now. Thank you for watching and stay tuned.